Are you wondering what you should be doing and not doing during the mortgage loan process? Well, great news. I'm going to cover the top 10 do's and the top 10 don'ts during the mortgage loan process. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you this important information. So let's start with the top 10 must-dos during the mortgage loan process. Number one is do stay current on all your existing credit accounts. So pay all your bills on time during the process of purchasing a home, because your credit, if you don't pay, that could severely affect your credit report. It could affect your ability to buy a home. Lenders are required to monitor your credit during the entire process, all the way up until midnight the day you close. Do keep all your financial records in good order. You will be asked for a lot of documentation during the mortgage loan process, and you'll probably be asked at least twice. Once for the pre-approval, and then once you get a contract during the loan process, you're going to be asked to update all that information again. So keep all your bank statements, your pay stubs, your W-2s, your tax returns. Keep all that information. Have it easily accessible. Do ask questions and become educated on the home buying process. Make sure you understand what your pre-approval is, understand what your loan options are, your down payment options, your closing costs. You should have a discussion with your mortgage lender so that you understand all of those options. So if you have any questions at any time, give us a call, 302-703-0727. We'll review all that with you. Number 4, do get pre-approved for a mortgage before you go shopping for a home. This is so important because you don't want to fall in love with a home that's outside your price range or that you cannot qualify for. Or if you get under contract to buy a home and then find out you're going to get turned down for the mortgage. So a solid pre-approval tells you how much your payment is, what's your purchase price, how much down you need, what you need in closing costs, and can you negotiate any of that to be paid by the seller. And then someone should review all your financial information and verify that you qualify for the loan. That way there's no surprises and you end up owning your own home. Number 5, do hire a real estate agent to represent you as your exclusive buyer's agent. This is huge, and the most important thing is the seller pays your buyer's agent. There is no advantage to not having a buyer's agent, so get a full-time real estate buyer's agent. If you need a recommendation, we will certainly give you one. Number 6, do keep working at the same employer and keep your income consistent. Lenders are required to verify your employer at 24 hours prior to the closing day. And then we have to verify your income at the pre-approval and then re-verify it during the loan process when it goes to the underwriter. So you want to make sure you keep your income consistent. If you're using a second job to qualify, keep working the same hours. If you're getting overtime or bonuses, keep working the overtime, keep getting the bonuses. If you're full-time 40 hours, keep working full-time 40 hours. Don't cut your hours to 30 because then your income's going to drop and you may no longer qualify. So keep the same employer and keep your income consistent. Number 7, do call your mortgage lender if you have any questions or concerns at all. Anything comes up, call us, 302-703-0727. There is no dumb questions, only the one you don't answer. We are more than willing to educate you, answer all your questions. We want you to be comfortable during the process. All right, number 8, do get a home inspection from a licensed inspector. This is like your insurance policy for buying the home. They're going to go through the house top and bottom, make sure there's nothing wrong with the house, you're not missing anything. They're going to get in the attic, they're going to walk the roof, all of that stuff. And if you are having the contract, the home inspection contingency, if anything comes up, you can negotiate for repairs to be done by the seller. If you don't have a home inspection contingency, you're buying it as is, that could be a big problem. Number 9. Do turn in all your requested loan documents within 24 hours of being asked. You have to have a sense of urgency during the loan process. When you get under contract, there are dates in the contract, and if you don't meet those dates, the seller can cancel and keep your deposit for breach of contract. So you have to make mortgage application typically within 48 hours. The lender has to process all your documents and get it underwritten and get a mortgage commitment out. You have to have your home inspected. So you got to have a sense of urgency. If the lender asks you for something, get those documents back within 24 hours. All right, and then number 10 on the do's, do tell your mortgage lender everything when getting pre-approved. Don't hide anything. Your mortgage lender is going to find out. Almost everything about you is somewhere online. Lenders, we have these reports we run. We're going to find out every home you've ever been entitled to. We'll find out if you had a late payment on a mortgage that's not reporting. We'll find out if you had a foreclosure. We'll find out if you had a short sale. We'll find out if you had a bankruptcy. We're going to find out everything. We're going to find out if you quit your job. We're going to find out if you get a new collection. We're going to find out if you buy a new car during the process. So All of that stuff is out there. Tell us during the pre-approval the good, the bad, the ugly. That way we can make sure you're going to qualify for the loan. And if you don't, we'll give you an action plan and tell you what to do. So it's best to tell us up front. So that's your top 10 do's during the mortgage loan process. Let's go over your top 10 don'ts. So number 1, don't quit your job. Lenders verify your employment within 24 hours of closing. If you quit your job prior to closing, you are not closing. Now, if you get a new job, you're still not closing because we have to verify new employment. You're probably going to have to get pay stubs. It's typically, if you get a new job, if you're lucky, minimum 30 to 45 days because we're required to have 30 days of pay stubs from your current job. It could be longer depending on if you had a gap prior to that or if you switched in commission. So again, just buy the house. After you buy the house, if you want to change jobs, go ahead. Number 2, don't apply for any new credit of any kind. If you apply for new credit, the lender will find out. We are required to monitor your credit from the day you apply all the way till midnight the day of closing. So if you buy a car, get a new credit card, your approval is now invalid. We have to get the information on that new credit, add it to your profile, and make sure you still qualify. So don't open any kind of new credit at all. Don't go shopping for furniture. Don't go buy a car. Don't go co-sign a loan for anybody because that's the same as you opening new credit. Number 3, don't pay off any collections unless told to do so by your loan officer. If you pay off a collection that's on the file, it could actually drop your credit score. And you could also spend money that we're planning on you using. So unless during the pre-approval process we tell you need to pay off a collection to qualify, don't pay one off, okay? Now if you have a new collection that's sent to you, it's not on your credit report, well then you need to tell us right away, and we're probably gonna have to negotiate some kind of payment so it doesn't hit your credit report and doesn't drop your credit score. So always call your lender first. Number 4, don't close credit card accounts during the process. If you close accounts, typically your score drops and you may go from qualifying to not qualifying. So keep your accounts open. You can pay them to zero balance, but closing them is a no-no. Number 5, don't change jobs during the process of buying a home, or you could delay or even miss out on purchasing the home. We're required to document your income to qualify. If you change jobs, we've got to document the new job. We've got to document that typically with 30 days of pay stubs. So if you're closing within 30 days and you change jobs 2 weeks prior to closing and we need 30 days of pay stubs from the new job, well, it typically takes 45 days to get your 30 days of pay stubs. Now you're missing your closing date. So again, don't change jobs. Talk to your lender of what's going on. Be proactive. Number 6, don't go shopping for a home without a mortgage pre-approval letter. That is a legitimate pre-approval letter. That means someone has checked your credit, got all your information, and most importantly, they verified everything with documents, pay stubs, W-2s, tax returns, bank statements, all that stuff. Number 7, don't make undocumented deposits into your bank account. Pretty much no cash deposits, no large deposits you can't source. We as lenders are required to source the deposits into your bank account. It's part of the anti-money laws that are in for banks. There's no way around it. If you drop $10,000 cash into your bank account and you can't source it, you got a problem. So payroll deposits, easy to source, no big deal. Number 8, don't transfer credit card balances during the loan process, because then we're going to have to get a new credit report verifying the new balances with the new payments and all that, and you could no longer qualify. So wait till after you buy a home. Don't take cash advance on credit lines for money to purchase the home. You are not allowed to use unsecured funds that you borrow to purchase a home or pay for your closing costs, any of that. So if you take a cash advance on a credit line or a credit card that's not secured against real property, that is an unsecured loan. That is a no-no when buying a home. And then number 10, don't spend your money that you need to purchase the home. So if you need $5,000 to buy the house for everything and you got $5,000, don't go shopping for furniture. Don't lend somebody money, because if you spend the $5,000, you ain't buying the house because you're short money to close. All right? So that's the top 10 do's and the top 10 don'ts during buying a home. If you follow these guidelines, you are setting yourself up for success. You should shortly be a new homeowner. If you have any questions or concerns, feel free to give me a call, 302-703-0727, or you can find me online at www.delawaremortgageloans.net. Have an awesome day.